20 option prospects, 10 calls, 10 puts, and 10 market sessions to prove which ones deserve to stay on our radar. This is the new 6-week roster for Tuesday, August 25th. Every option gets a grade, a cost, a model probability, a real catalyst, and a clear risk. No hype, no hidden losing ideas, just the list and the evidence. Before we draft anybody, read the card correctly. The large overall number is our research grade out of 100. It ranks the option for more research. Is not a win probability. The separate percentage is Barchart's profit probability at expiration. That is a model estimate based on the option's break-even price. It is not a forecast. Every contract begins at watch tonight. The catalyst research is complete, but tomorrow's price confirmation and live bid and ask spread are not. A watch rating means pay attention, not buy. We start with the calls, counting from 10 to 1. At number 10, Scorpio Tankers. The October 16th, $82.50 call. 53 days remain. The research grade is 63. One contract was offered at about $310. Barchart's model probability was 27.9%. The catalyst is a strong second quarter and a declared dividend. The risk is that tanker rates and shipping conditions can turn quickly. Number 9 is EchoStar. The October 16th $90 call. Grade 64. About $640 for one contract. Model probability 31.6%. The highest on the call list, but still not a forecast. The possible reset comes from the company's restructuring. The danger is that a large accounting gain can hide subscriber losses and financial stress. Number 8 is Intel. The October 16th $95 call. Grade 64. Cost about $560. Model probability 27.9%. Revenue grew 25%, and Intel reported progress on its newest manufacturing process. The risk is heavy spending and the size of the accounting loss. Number 7 is Rocket Companies. The October 16th $15 call. Grade 66. Cost about $86. Model probability 29.1%. Rocket reported its best profit quarter in 4 years and record mortgage market share. The risk is simple. High mortgage rates can slow the whole business. Number 6 is Rivian. The October 16th $18 call. Grade 67. Cost about $103. Model probability 27.9%. Rivian has started outside deliveries of the R2 and improved its guidance. The risk is the cost and difficulty of ramping production. Now the top 5. At number 5, NextDecade. The October 16th $8 call. Grade 68. Cost about $45. Model probability 27.8%. Rio Grande liquefied natural gas construction was ahead of schedule and within budget. The risk is that a massive energy project can still face financing, construction, and regulatory delays. Number 4 is Permian Resources. The October 16th $25 call. Grade 72. Cost about $90. Model probability 27.6%. The company reported $751 million of adjusted free cash flow and revised guidance. The risk is falling oil and natural gas prices. Number 3 is Xpeng. The October 16th $12 call. Grade 73. Cost about $59. Model probability 27.5%. Second quarter revenue jumped from the first quarter, and the robotics business announced more than $900 million of financing. The risk is fierce electric vehicle competition and deliveries that were nearly flat from a year earlier. Number 2 is Snap. The October 16th $6 call. Grade 75. Cost about $35, the lowest cost among the top 5 calls. Model probability 28%. Snap grew revenue 19% and produced positive free cash flow, but it still reported a net loss, and advertising demand can weaken fast. And the number 1 call is NVIDIA. The October 16th $220 call. Grade 76. Cost about $810. Model probability 27.3%. Earnings arrive Wednesday, August 26th. That event can reprice the entire artificial intelligence group, but can also create a violent gap and a fast drop in implied volatility. That makes NVIDIA the highest-ranked call prospect, not an automatic earnings bet. The call board is NVIDIA, Snap, Xpeng, Permian Resources, Nextdecade, Rivian, Rocket Companies, Intel, EchoStar, and Scorpio Tankers. All 10 are first appearances for these exact contracts. Their starting grades are frozen. Tomorrow's grades can move, but the original contracts will not be replaced after we see the results. Now the puts, again from 10 to 1. At number 10, PG&E. The October 16th, $17 put. Grade 56. Cost about $76. Model probability 26%. The bearish case is wildfire, regulatory, or financing pressure. The risk to the put is that PG&E reaffirmed its full-year guidance and improved core earnings. Number 9 is Strategy, formerly MicroStrategy. The October 16th, $115 put. Grade 56. Cost about $1,025. Model probability 29.5%. This is highly sensitive to Bitcoin and continued share financing. A Bitcoin rally can punish the put quickly. Number 8 is Energy Fuels. The October 16th, $14 put. Grade 58. Cost about $124. Model probability 28.9%. The bearish case is execution risk around acquisitions and construction. The danger to the put is strong strategic support for United States rare earth supply chain. Number 7 is Robinhood Markets. The October 16th, $95 put. Grade 58. Cost about $555. Model probability 26.7%. A slowdown in trading activity or renewed regulatory pressure could matter. But Robinhood's revenue grew 32%, and several trading lines reached records. Number 6 is T1 Energy. The October 2nd $4 put, with 39 days remaining. Grade 60. Cost about $45. Model probability 27.9%. The downside case centers on the quarterly loss and the financing and ramp of its Austin solar cell factory. The risk is a large supply agreement and policy support for domestic solar manufacturing. The top 5 puts begin with SpaceX. At number 5, SpaceX. The October 16th, $125 put. Grade 60. Cost about $710. Model probability 27.2%. SpaceX went public at $135 in June, so the stock is still in price discovery. Future share unlocks and heavy investment can add pressure. But launch, Starlink, and artificial intelligence enthusiasm can squeeze a bearish position without warning. Number 4 is ServiceNow. The October 16th, $120 put. Grade 61. Cost about $630. Model probability 27.7%. This is a valuation versus growth test. ServiceNow raised its outlook and grew revenue 24%. So the put needs real price weakness before it deserves more than a watch. Number 3 is SoFi. The October 16th, $17 put. Grade 61. Cost about $81. Model probability 27%. A bearish setup would need record results to stop supporting the stock. The risk is obvious. SoFi just reported record revenue, member growth, and net income. Number 2 is Intel. The October 16th, $80 put. Grade 66. Cost about $450. Model probability 26.5%. The put focuses on the accounting loss and the cost to the manufacturing recovery. The opposing case is 25% revenue growth and real progress on Intel's new manufacturing process. And the number 1 put is Tesla. The October 16th, $330 put. Grade 68. Cost about $1,255. Model probability 27.3%. This is the only exact contract returning from a prior board. It is making its second appearance, but its research grade fell about 1.3 points. Tesla delivered 480,126 vehicles in the second quarter. That strength is exactly why a bearish trade needs confirmation instead of an opinion. The put board is Tesla, Intel, SoFi, ServiceNow, SpaceX, T1 Energy, Robinhood Markets, Energy Fuels, Strategy, and PG&E. 19 contracts are making a first appearance. Tesla's exact put is making its second. First appearance replaces the vague word new, and every future card will show the true count. For Tuesday morning, I would put 4 cards at the front of the desk. NVIDIA, because earnings arrive Wednesday and liquidity is exceptional. Snap, because the contract is inexpensive, liquid, and backed by measurable operating improvement. Tesla, because it is the strongest put grade and the only returning exact contract. And SpaceX, because a fresh public stock can move violently while the market is still deciding what is worth. But none is decision-ready tonight. We still need the stock to confirm direction after the open, the option spread to remain reasonable, and the move to avoid becoming too extended. If those checks fail, the rating stays watch and there is no trade. Our research archive now covers 17 scanner snapshots, 340 list appearances, 232 exact contracts, and 125 fixed session observations. 4 later opportunity moves. Approved price history covers 93 of 213 track contracts. 3 doubled at a later observed bid, and 5 touched double at a traded high. Those are real historical opportunities, but they are not assumed exits, and they are not account returns. The fixed exits tell the other half. At one session, only about 23% were positive after measuring from a scanner ask to the observed bid. At 5 sessions, 20% were positive. Average and median returns were negative at both checkpoints. That does not mean there were no winners. It means buying every list and holding blindly has not worked. Entry timing, profit-taking, spread cost, and leaving before time decay takes control are the skills we still have to prove. These exact 20 contracts are now frozen for 10 verified market sessions. The primary checkpoint is September 8th. Daily grades may rise or fall, but we will not swap out a contract after seeing what happened. Friday reviews will separate triggered ideas, never triggered ideas, opportunity moves, and fixed exits. That is how we build a useful record without rewriting history. The job tomorrow is not to force a trade. It is to watch the strongest prospects, demand confirmation, and protect capital when the evidence is incomplete. Professional level tracking for regular people with regular jobs. This is educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, liquidity, events, and suitability before making a decision.